Suspects linked to a multi-billion-dollar money laundering racket donated nearly 400,000 Singapore dollars to two prominent charities in Singapore. The president's challenge received more than $350,000, while Comchest received $30,000. The National Council of Social Service, which oversees both charities, says police reports and suspicious transaction reports have been filed. The council says donations that were disbursed to beneficiaries will not be affected. It adds that the charities are working with authorities to determine how to treat the funds. Second Home Affairs Minister Josephine Teo first revealed in a statement in Parliament that several charities had received donations from suspects.
For more insights, we are joined by Rajesh Singh here in the studio. She is the ASEAN Financial Services Risk Management Leader at EY. Good evening to you, Rajesh. It's good to see you again. What's the best course of action now for these affected charities?
Well, thank you for having me here this evening. The best course of action for these charities now is to ring-fence the funds, ensure that they're not commingled with other activities of the charities, and obviously collaborate with the authorities that are undertaking further investigation on this until there's a decision in terms of what needs to be done with the funds, whether it results back, or rather I'd say whether it would be taken into custody by the authorities pursuant to certain legislative requirements, or whatever that is directed by these authorities eventually.
All right, explain to in sort of, I suppose, layman terms, what you mean by ring-fenced. I donate money to a charity. What should that charity do when it gets that sum of money?
So ring-fencing in this case means that they need to set it aside. The funds should not be commingled with the activities or the other financial activities of the charities. And typically when a charity receives donation, they would go through their agreed parameters in terms of parties that they provide funding to or provide donations to, and then undertake that disbursement according to those terms of reference, if I may call it so. Now in this case, they should not be doing anything with it until they have further consultation from authorities.
Rajesh, how much due diligence do charities actually have to do when they are receiving funds, and specifically when the sums are sizable? I mean, in the case of the President's Challenge, we're looking at $350,000.
So, Dawn, for the longest time, global standard setting agencies have been promulgating that charities must undertake due diligence, right? The reason being is that charities are very susceptible to money laundering. When we say that they should undertake due diligence, it simply means that they need to undertake screening. They need to assess the risk of these donors. They need to understand the profile of the donors. They need to understand the origin of the funds. Now, I know it sounds strange when I say that you need to undertake risk assessment or due diligence of a donor because you're receiving donations, right? So what possibly could be the problem? The problem, like I said, is really the fact that charities are very susceptible to money laundering.
All right. The susceptibility and your recommendations. So screen your donors, assess their risk profiles. Is there a way for a money launderer to still get round a more careful charitable organization?
Absolutely. And as you can see, the situation that we're dealing with in Singapore, the perpetrators typically would obfuscate their identity, right? They would create structures that make it difficult for them to be identified. They change their names. They will submit fraudulent documentation. They will create, a persona that looks whiter than white. So that's very normal in situations like this. And normally, we, at the first instance, might not quite understand the risk. But as we have further dealings with such parties, and typically if you look at it from the banking sector, when we start to look at transactions and what we call behavior, that's when we sort of start to see a pattern that something is amiss, right? For charitable institutions, it's that much harder, but they do need to put in that gatekeeping, if you like, that gatekeeping capability, so they are able to better assess donors.
Right. Presumably, banks are involved in these transactions as well to a great degree. I mean, the money's not going to move just sort of under the table, literally. I mean, you know, it's what role or responsibility do the banks play here?
So banks typically, and in this case, I'm very sure, would have undertaken their due diligence on the charitable organization that opens the account with them. And naturally, they would, and charitable organizations obviously, you know, will be watched. There will be scrutiny by the banks on their transaction, simply because they are, like I said, susceptible to money laundering. Now, banks would be looking at their, you know, typical sort of flow of funds, etc. But unless there are obvious red flags and parties that are involved that are potentially tainted, or patterns of the transactions are anomalous, one may not really pick up the problem very fast. It does take a while until the whole case sort of unfolds before we can actually see what's going on.
And very quickly, final question. Any organization, a charitable one, will be glad to get money. So it may not have the resources to be checking a fraudulent persona.
Absolutely. I think that is a case that we're dealing with not just here, but globally. But I think that's where charitable organizations should be looking at putting that, you know, that program in place, or use external service providers to do this for them.
All right, Rajesh, thank you very much for coming into the studios and sharing those insights with us. Rajesh Singh there, ASEAN Financial Services Risk Management Leader at EY.